Hello, everyone, and welcome to the Municipal Pension Plan's 2023 Annual General Meeting. My name is Gary Yee, and I'm the Chair of the Municipal Pension Board of Trustees. Thank you for taking the time to join us today. I would like to begin by acknowledging that most of us are joining this event today from unceded territories throughout the province and beyond. The Office of Municipal Pension Board of Trustees is located on the traditional and unceded territories of the Lekwungen people, also known as the Songhees and Esquimalt nations. We honor their ongoing connection to the land and respect the importance of the diverse teachings, traditions, and practices within this territory. As you can see, we have a full agenda today. First, we'll share financial highlights from 2022. Then we'll tell you about the plan's net zero goal. Next, we'll hear an investment update from BCI. We'll also have a message from the board chair of the Municipal Retiree Benefit Trust. Then we'll share what's ahead for the Municipal Pension Plan. And finally, we'll move into the question and answer session where experts are available to help us answer your pension and investment questions. For the Q&A session, you'll be asked to enter your question in the box at the bottom left of your screen. If you have a personal pension question to ask, that can be done through Message Center in My Account. The link to My Account appears on your screen now. The AGM is for you, so if you have questions or comments, we'd love to hear them. Feedback can be sent to the email address on your screen. All plan trustees are appointed by an organization. Each of the organizations you see on the screen are responsible for appointing at least one plan trustee. Thank you to all the trustees who are here with us today. It's a privilege to work with you as we do our part to guide the municipal pension plan in the interests of members and their beneficiaries. Some of you may be new to the plan and attending the AGM for the first time. Let's quickly go over the organization of the plan. On the screen, you'll see the structure of the municipal pension plan. Starting at the top, the employer partner is the BC government together with the Union of BC Municipalities. The member partner is the Municipal Employees Pensions Committee. These entities and others appointing authorities appoint trustees to the plan board. We are a joint trusteeship. This means employer and member representatives share the responsibility for managing the plan. Here you can see how we, the Board of Trustees, fit into the overall structure. We also have the Office of the Municipal Pension Board of Trustees. This office works directly to support trustees and includes staff employed by both the board and the BC Pension Corporation. The Plan Executive Director, Judy Payne, is with us today. Finally, we have a number of agents and service providers we work with. Several representatives are with us today, including Aaron Walker Duncan, representing the BC Pension Corporation, the plan's administrative agent. Aaron is Vice President of Board and Communication Services. Gordon Fife is Chief Executive Officer and Chief Investment Officer for the British Columbia Investment Management Corporation. BCI is the plan's investment agent. Catherine Robertson, our plan actuary, is with Eckler Limited. Eckler provides actuarial services to the plan. We're also pleased to welcome Bonnie Pearson, Board Chair of the Municipal Retiree Benefit Trust. Thank you all for being here. The most important people joining us today are you, our members, and your union and employer representative. We're proud to say that over 420,000 people like you rely on the municipal pension plan to provide a dependable income in retirement. Research from the Canadian Public Pension Leadership Council show that over 7,000 businesses across British Columbia are supported by funds generated from public sector pensions. Every $10 paid in retirement income support nearly $16 in economic activity in BC. Together, we're strengthening communities and supporting local jobs while providing members with retirement security. We hope you enjoyed today's event and that it helps you learn more about the value of your pension. Who are our members? As your trustee, we strive to understand who you are and what's important to you. This is critical to successful management of the pension plan. Our members include workers from many industries, active healthcare workers, public servant within local government, people in community social services, police officers, firefighters, and staff at school district and colleges. Thank you to our members for working to support and improve communities throughout our province. Like most of our members, you may be actively contributing to the plan as you build your career or find your path. Many of you are collecting your pension after working hard to build a future for yourself and your families. And some of you have stopped working with the plan employer and are on leave of absence to focus on other aspects of your life. Members like you are reaching milestones in your career and personal lives, and we're pleased to be there with you every step of the way. The Municipal Pension Plan is the largest pension plan in Western Canada, providing hundreds of thousands of members like you with retirement security. But it's not just members who benefit from the plan. Their spouses, family, and beneficiaries all benefit from the reliable income the plan provides. There really is strength in numbers. As the plan continues to grow, more workers across the province can breathe easy knowing they have a pension. I'm proud to welcome you all to the Municipal Pension Plan 2023 Annual General Meeting. Once again, our agenda for the day is up on your screen. Let's get started. Vice Chair Donna Lomer is next with the 2022 financial highlights. Donna has been a board member since 2017, and I know she's excited to share the information with you today. Over to you, Donna.
Welcome everyone, and thank you for attending this year's AGM. I'm Donna Lomer, Vice Chair of the Municipal Pension Board of Trustees. 2022 challenged all of us in many ways. We faced lingering effects of the multi-year pandemic and experienced the highest inflation seen in 4 decades. We watched major environmental and geopolitical events unfold at home and around the world. Amid the uncertainty of the day-to-day world, your Board of Trustees had a clear set of goals. As a board, we work together to build and carry out long-term strategy for success. We draw on our areas of expertise and experience, engage experts, and set goals for one shared purpose: to ensure the plan is well managed and sustainable for the long term. I'm happy to share the results of these efforts with our financial highlights from 2022. Our role as the Board of Trustees is to make investment decisions in the best financial interests of the plan beneficiaries, which includes all of you members who are watching. We also ensure employers can offer an ongoing valuable benefit to employees. The Municipal Pension Plan remains well-funded despite continuing uncertainty in the world markets. As at December 31st, 2022, the plan's assets were $71.5 billion. That's down from $74.2 billion at the end of 2021. The annual rate of return was negative 3.5%, which outperformed the benchmark of negative 5.9%. Like most other Canadian public sector pension plans, we saw investment losses in 2022. We take a long-term view when developing the plan's investment strategies, and we are well positioned to withstand short-term losses like those we had in the last year. Our careful approach lets us govern with a steady hand and avoid overreacting to short-term trends in the investment market. The plan's 5-year return rate of 6.7% and a 10-year return rate of 8.5% show that focusing on the long term works. You'll see that contributions that came into the plan were less than the benefits we paid out. While this is significant, the plan's durability reduces the impact. In 2022, the plan collected $2.6 billion in member and employer contributions. Approximately $2.9 billion was paid out in pensions, benefits, and expenses. The Rate Stabilization Account, created in 2015 to protect us against future contribution rate increases, was valued at $4.1 billion at the end of 2022. Managing risk is part of the fiduciary duty held by the board and BCI. This includes assessing risk and limiting exposure, as well as identifying and capitalizing on opportunities. Diversification of investments is key to managing risk, and we regularly review our asset allocation. The municipal pension plan is in a solid financial position and will be there for you whether you're 2 or 20 years away from retirement. Our long-term view has charted a path of success and sustainability. As we look to the future, we're committed to continuing our focus on responsible investment strategies. That's why we've set a goal to reach net zero emissions in the plan's investment portfolio by 2050. Despite the uncertainty of our times, the Municipal Pension Plan continues to deliver on its goal of providing secure pensions to all members. Thank you.
Thank you for the update, Donna. Next up, we have Harpinder Sandhu with information about our net zero goal. Harpinder has been a board member since 2019 and is currently the chair of our investment committee.
Hi, I'm Harpinder Sandhu, chair of the Municipal Pension Plan Investment Committee. Thank you for joining us. In 2020, the board made it a priority to address climate risk in the plan's investment portfolio. We have worked on this priority over the last 3 years, and I'm happy to share our progress with you. Let's take a look at our net zero goal. From heat domes to atmospheric rivers, we've all witnessed the impacts of climate change in our province over the last 2 years. As your board of trustees, we take climate risk seriously. That's why we've set a goal to be net zero by 2050. By 2030, we aim to reduce the carbon intensity of our portfolio by 55% of 2020 levels. What does net zero mean? A net zero portfolio means the investments in total don't contribute to an increase in global greenhouse gas emissions. Our net zero target aligns with the Paris Agreement, which is an international treaty on climate change. Its purpose is to limit global warming to less than 2 degrees above the pre-industrial levels. What does this mean for our members? Addressing climate risk in the plan's investment portfolio means the fund is more resilient, and that means more pension security for you now and in the future. We believe that companies that take environmental, social, and governance factors into account have less risk and generate more long-term value for investors like the pension plan, compared to companies with less robust practices. How will we reach our goal? To reach our goal, the plan's investment manager, BCI, will engage with portfolio companies and hold them accountable for credible plans to lower carbon emissions. Choose investments that align with our net zero goal and meet our financial targets. Increase investments in clean energy solutions and track economy-wide decarbonization. We were one of the first large pension plans in Canada to voluntarily report climate-related financial disclosures. We use climate scenarios to understand how climate change affects our investment portfolio. We measure the carbon footprint of all asset categories. We support BCI in using climate change analysis in its investment decisions. We collaborate with and take part in global movements to address climate risks such as Climate Action 100+. And we are educated and informed about climate change and how it affects investment markets. This is the beginning of a major effort to achieve net zero climate investments by 2050. Net zero and secure pensions overlap. Climate change and its impacts threaten future growth and prosperity. Acting now will serve our long-term objectives. We're excited about our progress and look forward to sharing updates with you in the coming years. Thank you.
Thank you for sharing that information about our net zero goal, Harpinder. Now I'd like to introduce Gordon Fife, Chief Executive Officer and Chief Investment Officer for BCI. Gordon is going to provide us with an investment update and address some of the hot topics that may be of interest to you. Over to you, Gordon.
Hello, I'm Gordon Fife, and since 2014, I've been the Chief Executive and Chief Investment Officer of BCI, British Columbia Investment Management Corporation, the manager of your pension. Well, looking back, I'm pleased to report to you that your plan's investment returns over the last 5 years have averaged 6.7% per year. That's 6.7% per year in each of those 5 years. And if that adds up over the 5-year period to over 38% increase in the overall funds in the pension plan. And it beats the fund's benchmark of 5.2% by 1.5% per year. So the return was 6.7, the benchmark was 5.2, so outperformance of 1.5% per year during that 5-year period. Well, that's looking back, but let's spend most of the time looking forward. And I'm going to start by talking about the economies. There is a lot of uncertainty. So are we going to be faced with a soft landing and miss the recession, or are we actually going to experience a recession? Are interest rates at the Bank of Canada, have they finished raising them, or are they going to have to raise them further? There is a lot of uncertainty, but I want you to know it's not just us on this call this morning who are uncertain. The Bank of Canada itself said at the June meeting I had with them that they would be making their rate decisions going forward on a meeting-by-meeting basis, depending on the information from the economies that were coming out at that time. So even they don't have a lot of clarity on where inflation is going, and so they want us to be prepared that there could be more going forward. Well, the economies are slowing right now, though not as quickly as originally expected. And this is not really an ordinary economic cycle, and partly for two reasons. As we came through COVID, it really threw things off. The first is that all of us saved a lot of money during COVID through the government subsidies, but also through the inability to travel and spend money. So our savings were much higher as COVID came to an end than would normally have been the case. And we've been spending that money, which has kept the economy quite strong. But that's running down now, and we're getting close to normal savings levels. So that spending support is running out. The second thing is that incomes have been very, very strong. Unemployment, as you may have read, is quite low in Canada. It's up a little bit from where it was, but still historically very low. But also wages have been growing at between 4 and 5% per year. How do you get to 2% inflation with wage growth of 4 to 5% per year? Well, there are two things that I do know. And the first is that rates are going to stay high for some time. They may go higher, but they're not going to be coming down for some time. That's the first. And the second is that the Bank of Canada will get inflation back to 2%. They're adamant that they will be bringing inflation back. Their credibility depends on it, and they're going to do that. But let me just say that if you have a mortgage, whether it's a floating rate mortgage or it's a fixed mortgage that you've rolled recently or you're worrying about having to roll going forward, you're already feeling the pain that this environment is causing. But the Bank of Canada is, as I mentioned, adamant. They will bring inflation down. And how do they do that? They've got to get us to spend less. And how do you get somebody to spend less? You make them feel poorer. And how do you make somebody feel poorer? Well, you reduce the value of their house. You reduce the value of their stock portfolio and any of their other investments. Bank of Canada will never tell you this, but they are going to make us all feel less wealthy to make sure that we slow down our spending going forward, and that in itself is ultimately going to bring down the level of inflation. So that's what's going on in the economies. On the markets, this economic and policy uncertainty is leading to a lot of market uncertainty. So you'll go through a couple of days or even a slightly longer period where you'll see the markets run up, or you'll see the stock markets coming down. But if you look at it, it's been in a very, very tight range over quite a long period of time, which just shows us there's a lot of uncertainty and there's no conviction one way or the other right now. So let me talk about the implications of all of this economy and markets for the BCI portfolio. And your portfolio is built of long-term, high-quality core assets. We have not been investing in stylish things like cryptocurrencies, SPACs, things like bell-bottoms and high platform shoes. We're very core asset buyers, long-term holders of high-quality assets. But I will say that if there is a recession, if there is a decline in markets, we will be, on an accounting basis, marking down the value of our assets. So you'll see our returns won't be what they have been historically. But the trick in marking down the asset, that's just an accounting entry. If you don't have to sell the asset, if you have the capacity to hold on to the asset, if you've prepared for the bad markets, you'll be able to get through that and you won't have to realize the loss. You'll report it from an accounting basis, but you actually will continue to hold the asset and it will recover. But more importantly, at BCI, we're very, very liquid. We've been preparing for this for some time. We have a lot of liquidity, so we have the capacity to go and buy when other investors are finding themselves in trouble and have to start selling assets. So I always say, if during a real bad market, if you come around the office and you see us all smiling, don't think we're crazy. It's because we're actually out buying assets that we would only dreamed of getting at prices we would have never imagined, because we're helping other distressed investors out of their problems. And because we are such a long-term investor, we can do that, buy them and hold them for the next 10 or 20 years and do very well with that. So right now, we're waiting. The deal flow that we're seeing, the investments flow that we're seeing is very low. It's very quiet, but we are ready and we're on standby, waiting for better opportunities to come. Now, it's the strategy that we've been implementing the last 9 years that's prepared us for today's markets. We've been diversifying into more markets, more countries, more types of assets. Importantly, we brought a lot of the investment-making decisions that were previously done by people outside the organization. We've brought those in-house, inside BCI. We've built our own teams to manage a lot more of the BCI assets. We have saved over $1.5 billion since 2016. That's $1.5 billion that we would have paid external managers in their fees, because we built the teams internally, took the money away from them, and brought it in. Now, how did we do that? Why does that work? Well, it's because external management, the fees that we pay people on the outside, are sometimes 10 times as expensive as what it costs us to build the teams internally. So, for example, if we take a private equity mandate and give it to somebody on the outside, they're going to charge us around 4.5%. So let's say it's $100 million we're handing out to somebody at 4.5%. That's $4.5 million a year in fees that we would be paying that external manager. BCI can build the internal team, and the costs to you of doing that is 1/2%. So instead of $4.5 million, it would cost $500,000. So just on that $100 million, we're saving $4 million a year. That's where that $1.5 billion has come from. The same for real estate and infrastructure. Real estate, for example, costs, if we hand it out to someone else, about 2.5%. If we do it internally, it's costing us about 1/4%. So we've been continuing to bring more and more of those investment decisions in-house, because not only does it save us a lot of money, but it also gives us a lot more control over the assets. So in terms of influencing, and I'll talk in a moment about bad behavior in companies, it gives us a lot more control over the values of the organizations that we're investing in. But overall, BCI is a low-cost asset manager among our peers in Canada. So when we compare ourselves to the other 7 big pension funds in Canada, if we are running at a cost of $300 million a year less than if we were costing the average of the other 7 pension funds. $300 million a year less. That's a lot of money each and every year coming in, because we run our organization very efficiently. And at BCI, we know that a penny saved for our pensioners is the same as a penny earned, and they can spend it the same way. So looking forward, I just want to repeat that we could be in for a much tougher environment, and it's going to be tougher for returns, but that we're still looking for ideas to make sure that in the years ahead, we'll be able to generate value for you. So for one example, in the last year, we've opened 2 foreign offices. We opened an office in New York, and we opened an office in London. What that does is it gives us access to people. It gives us access to experience that we'd love to have, but for whatever personal reasons, those individuals just couldn't relocate to Victoria. So now we have them working for us, just located somewhere else. It also brings us closer to some of the big markets where the deal flows happen. So we're getting an earlier look at some very interesting investments. And finally, I'm going to discuss sustainability. And the reason I want to do that is I know that this is very important to the members of the municipal pension plan. So BCI has an ESG team of over 16 people today. And their job is to identify and to influence bad actors in our portfolios. Whether the bad actions are towards shareholders, clients, the community, or the environment, bad behavior drags down the value of our investment over the long-term holding period of BCI. So we engage with those companies, with the senior management, to let them know how we feel and to persuade them to change. When we meet resistance, sometimes we collaborate with some of the other large funds, both in Canada and the US and Holland and elsewhere, to all gang up on companies that are not behaving properly. But ESG is not just about policing existing investments. It's also about investment opportunities in the energy transition. And recently, we've invested in battery storage and solar companies, but there's also big opportunities lending to companies requiring some of the massive amount of capital that's going to be needed for the energy transition. So I'm going to stop here and see if there are any questions. But just before I end this, I'd like to thank the organizers for inviting me back again this year, and thank all of you for your patience in listening to me. Thank you.
Thanks, Gordon. I do want to clarify that we'll be taking questions for Gordon during the Q&A session. At last year's AGM, we had the pleasure of hearing presentations from the Municipal Retiree Benefit Trust, or MRBT. We're delighted to have them join us again this year to talk about the Trust's latest actuarial valuation. With that, I'd like to introduce Bonnie Pearson, Chair of the MRBT Board of Trustees. Over to you, Bonnie.
Hello, Municipal Pension Plan members. On behalf of my colleagues on the board of the Municipal Retiree Benefit Trust, or MRBT, I would like to thank the Pension Board for offering us time to speak with you today. I'm pleased to share the results of MRBT's first valuation. As of December 31st, 2022, MRBT has funding for 31.3 years of health benefits at current coverage and subsidy levels. Based on these results, the board has decided not to change coverage or subsidy levels right now. Before we dive deeper into the results, let's talk about what a valuation is and why it's important. Like your pension plan, the Municipal Retiree Benefit Trust has a valuation done at least every 3 years by an independent actuary. An actuary is a specialist in financial modeling, statistics, and risk management. A valuation is a snapshot of the trust's financial position at a specific point in time. The actuary compares current assets as well as expected future contributions, premium payments, and investment returns against the projected cost of future benefits. The valuation determines how many years MRBT can continue to provide the same benefits at the same subsidy level based on current funding. This is important because, unlike your pension, your group health and dental benefits are not guaranteed. To understand why evaluation is so important, you need to understand how your group benefits are funded. Extended health care benefits are funded through MRBT. Ongoing funding for the trust comes from 3 sources: employer contributions of 0.6% of active plan member salaries, premiums paid by retired members enrolled in group benefits, and investment returns. Dental benefits continue to be funded solely by retired member premiums. Like most things, the group benefits program is becoming more expensive to offer. And that's because the program faces cost pressures like benefit costs increase, inflation, and higher usage by plan members and beneficiaries enrolled in the group benefit program. Also, the amount of money available in the trust can vary based on the contributions received from employers, the number of retired members choosing to enroll in the group benefits program, and investment returns. These factors make it hard to predict how much the program will cost and how much money will be available to cover that cost. Fortunately, the MRBT board has several tools to help keep the funding of the trust on track, including regular valuations. Following evaluation, the board may choose to increase or decrease subsidy levels, enhance or reduce the benefits covered by the program, or maintain current subsidies and coverage levels. The extended healthcare plan is currently partly subsidized based on your years of service. That means the Municipal Retiree Benefit Trust may pay a portion of the premiums for your extended healthcare coverage. However, that subsidy is not guaranteed. The board reviews premium rates annually, and the results of the valuation do not directly affect rates. However, premium rates can change based on how claiming patterns are changing and demographics. These changes may then influence future valuation results. Valuation results show that as at December 31st, 2022, MRBT has enough funding for 31.3 years at the current coverage and subsidy levels. As a result of the valuation, the board has decided not to make any changes to coverage and subsidy levels right now. However, to ensure the group benefit program is sustainable for current and future retirees, the board aims for a funding target of 35 years. Premium rates will be set during the annual review process, and 2024 rates will be announced in Pension Life and on the plan website in January. Tools like regular valuations help the MRBT Board of Trustees plan for a sustainable future. In addition to doing regular valuations, the MRBT Board seeks expert advice from service providers and monitors program use, investment returns, and industry trends. The MRBT is still at the beginning of its journey. However, the MRBT Board is cautiously optimistic about the future. We believe we are on the right track to continue to provide members with access to group benefits over the long term. You can read more about the Trust's first valuation in our 2022 annual report, now available on the MRBT section of the plan website. Visit mpp.pensionsbc.ca, About Us, Who We Are, Municipal Retiree Benefit Trust. We will also share this information in the January issue of Pension Life, your retirement newsletter. On behalf of the MRBT Board, I'd like to thank you for your time today, and now back to you, Gary.
Thank you, Bonnie, for the update on the Municipal Retiree Benefit Trust. We will open things up for questions in just a little bit. First, I want to give you all an update on some goals and initiatives for the year ahead. We embarked on our 2023-2026 strategic plan in June. This strategic plan outlines our top priorities for the next 3 years. These priorities are to be a leading, responsible investor, continuing strengthening plan awareness, and growing the plan. I'd like to tell you a bit about how we're going to deliver on these priorities. Let's start with responsible investing. Responsible investing has been the board's priority for over a decade. We continue to make progress year over year on our investment goal, and the work we do from 2023 to 2026 will build upon this progress. As the plan's trustee, we remain committed to future-proofing the plan. This means mitigating risk associated with climate change. We actively seek opportunities to invest in ESG-focused investments that meet our return objectives and can get us closer to net zero greenhouse gas emissions by 2050. What is net zero? A net zero portfolio means the investment in total do not contribute to global greenhouse gas emissions. Over the next 3 years, we will work towards meeting our net zero goal and interim target. We will continue to engage with our peers in the Canadian pension industry and participate in setting standards for responsible investing. We believe that engagement with companies is more effective than divestment. Working with companies to transform their businesses will benefit our members, communities, and portfolio companies. We will not use carbon offsets or blanket divestment to meet our net zero goal. Part of being a responsible investor is embracing continuous learning. Over the next year, we will continue training for trustees so we stay up to date on emerging trends in responsible investing standards and practices. Most importantly, we will be transparent about our climate action initiatives so you'll remain confident in our progress. The next priority we'll set for the coming year is to strengthen plan awareness. We want a bright financial future for workers throughout the province, and the pension plan is part of building that bright future. One of our goals for 2024 is to improve communication to new and young members. Another focus will be to enhance communications to all plan participants about how our governance and stewardship practices ensure the plan's longevity. For many, participating in plans is mandatory, but where it is optional, some employees may find it hard to decide whether to join. Over the next year, we will seek to understand the need of potential members and improve our tools and resources so they can make this decision with confidence. Part of this work is to support financial literacy. Last year, we redesigned our courses to make them shorter and easier to understand. In the year ahead, we'll use members' feedback on the course to enhance our pension education offering. A growing plan is a strong plan. Educating and engaging potential members will contribute to the overall plan's health. Plan growth is good news for all current and future members. Not only does the plan growth means greater access to pension in time when planning for retirement is increasingly challenging, it also means safeguarding the longevity of the plan. As life expectancy increases, we will see shift in labor market trends. We will see a continued growth in the plan's retired to active member ratio. In the coming year, we'll explore ways to expand membership in the plan. That way, there's a steady flow of active members and more workers benefiting from the security of the plan. Part of this exploratory work will be to see if we can make changes or improvements to enrollment and eligibility rules so more employees are eligible to join. We know that employers are keen to recruit and retain top talent and provide their employees with a defined benefit pension plan, so we will also review the eligibility rules for employers' enrollment. We'll update you with our progress on these initiatives in the future annual report. The plan's 2022 annual report includes our fourth climate-related financial disclosure. We believe that better access to climate-related data helps investors assess and manage climate risk-related investment portfolio. We're committed to providing disclosure in line with the world's leading framework, the Task Force on Climate-Related Financial Disclosure, or TCFD. In 2006, BCI was a founding signatory to the Principle for Responsible Investments, or PRI, a United Nations-supported network of investors from around the globe. The plan board became a signatory in 2007. In the year ahead, we will continue to monitor and share our progress on climate action. For example, we will track BCI's progress using policy advocacy, proxy voting, and corporate engagement to reduce the portfolio's carbon intensity. We will also review the portfolio's highest emission companies for each asset class. It's a priority for us to enhance communication for members and employers. We know pensions are complex, and part of our job as trustees is to provide tools and resources to help you understand your pension. That's why we recently expanded our online member education to include a series of animated videos focused on various pension topics and services. These short videos cover things like nominating a beneficiary and applying for retirement online. This is all part of our goal to improve the digital experience for members. In the spring, we'll improve the personalized pension estimator in My Account so that it works for members who have a former spouse with entitlement to a portion of their pension. We're delighted that this valuable tool is now available to broader membership. Also new to My Account is a tracking system that lets you view and track the status of your request or application. We look forward to bringing you more enhancements over the coming year. Remember to check the plan website regularly for updates. I want to take a moment to acknowledge our outgoing Executive Director, Judy Payne, who is retiring at the end of this year. Judy has been with us since 2014 and made a significant contribution to the work of the board. Most notably, Judy supported the board with progressive initiatives such as plan design, orchestrated a stronger support network for the board, and facilitated the implementation of the robust strategic planning and risk management framework. Judy's has dedicated much energy to ensure the board is focused and aligned to our vision. She is a passionate, thoughtful, dedicated, and ambitious leader, and we cannot thank her enough for her service. Judy, you'll be missed. We wish you all the best. With that, I'd like to introduce our incoming Executive Director, Chelsea Kittleson, who will start her new role on November the 15th. With 25 years of finance, capital market, and public sector pension industry experience, Chelsea has a deep understanding of the complexities of managing a defined benefit multi-employer pension plan. Her most recent role as Director of Client Relations at British Columbia Investment Management Corporation, or BCI. Prior to joining BCI, she worked in capital markets, including as Director at CIBC World Markets, and led financial and investor relations at British Columbia Ferry Service Incorporated. We are confident that Chelsea's expertise and dedication will greatly contribute to the success of our 2023 to 2026 strategic plan, positioning the plan for continued growth and stability. Welcome, Chelsea. We're delighted to have you. Before we dive into the question and answer session, I'd like to go over a couple of housekeeping items. On your screen is a description of the different roles we have with the Municipal Pension Plan. Representatives from these areas are available to help answer your questions. Your Board of Trustees can answer questions about how the plan is managed and how the fund is invested. BCI, our investment agent, can answer your questions about planned investment approach. Questions about how your pension is administered can be directed to BC Pension Corporation, our administrative agent. If you have a question about group benefits, such as your extended health or dental care, Pacific Blue Cross is here to help. Bonnie Pearson, Board Chair of the Municipal Retiree Benefit Trust, can answer your questions about the trust and how your group benefits are funded. Other experts will also be on hand to help answer questions not covered here. To ask a question, enter it in the Ask box located on the bottom left of your screen. We'll get to as many as we can. If we run out of time and don't get to your questions, a response will be published into the plan's website in the coming weeks. Once again, you can ask a question by entering it in the Ask box located on the bottom left of your screen. Just a reminder that if you have a personal pension question, those can be sent through My Account at myaccount.pensionsbc.ca. From the plan's website, sign in and register for My Account and locate the envelope icon on the web page to send a personal pension question. You'll be contacted with a response. Thank you. We are now ready to take your questions. Our first question is going to be for Donna. The plan lost 3.5% of its assets in 2022. Will contribution rates have to rise? And why did this happen?
Thanks, Gary. The plan is fully funded, meaning that there is enough money to pay pensions for all current and retired members at current contribution rates. It has been a challenging year in the markets, but we take a long-term view when developing the plan's investment strategies, and we are well positioned to withstand short-term losses like those we had last year. Contribution rates are not changing because of last year's returns.
Great. Thank you, Donna. The next question we have is, how soon will the MPP board notify us of the COLA for 2024 so that we can adjust the income tax deducted from our pension before MPP's January 2024 cutoff for our first payment? What was the September to September CPI for this year? So we anticipate the September to September CPI will be announced later this month. The decision will be made later this year after we've had the opportunity to take all factors into consideration. The COLA amount is posted onto the plan website by January 1st, usually by the last working day of December. Would also be, it would also be in the winter issue of the retired members newsletter, Pension Life, in January. So thank you very much. The next question I have is going to be for Harpinder. What would be one example of a leverage investment in our portfolio? I understand what all the others categories are in the investment portfolio.
Thanks, Gary. So a leveraged investment is a technique that seeks higher investment profits using borrowed money. So you would borrow money to use that for investment. So these profits come from the difference between the investment returns on the borrowed capital and the cost of the associated interest. So leveraged investing exposures, it exposes a little bit of higher risk, but we can manage that accordingly.
Perhaps, Gordon, you can share some examples of BCI funding program.
Well, I'll give you an example of leverage, Gary, that I think will help the person posing the question understand. So, for example, we own some very, very core real estate. So we have very core buildings. They're fully leased with the great tenants, long-term leases. And we can finance that with equity. So we can have 100% equity ownership of that building. But we know the cash flow that's going to come from the rents on that building. And so, and those are fairly riskless assets with lower returns. So what we can do is to borrow against that building, and so instead get some debt and use that to pay for the building, and then put in less equity, and that allows us then to take that equity and to put it somewhere else that would generate a higher return. So leverage, we're using leverage, but in a very, very moderate way. In fact, the leverage that BCI uses is significantly below the average of what our peers are using in any of our portfolios. And in fact, we were quite far behind in using leverage. So there are places that we will use leverage. There are other places where it's a much riskier investment, and we wouldn't use leverage and things like that.
Great. Thanks, Harpinder. Thanks, Gordon. The next question we have is going to be for Bonnie Pearson. Has the MRBT made their decision yet for the 2024 percentage increase in health and dental plan premiums?
Thanks, Gary. The decision for the 2024 premium rates will be published in the winter 2024 issue of Pension Life. That will be available to people in January of 2024, and we'll also put the rates on the website again in January of 2024 to be effective February 1st of 24.
Great. Thanks, Bonnie. Next question I have, it's going to be for Gordon. Is BCI indicating a shift in our $15.5 billion real estate portfolio away from commercial office buildings and looking into investments into purpose-built residential apartment buildings, as all levels of governments are increasing incentives to build more of these?
Gary, in terms of our exposure to commercial real estate, let's call that office buildings, our Quadreal, our real estate subsidiary, has been reducing the exposure that we have to office buildings in our real estate portfolio since its creation in 2016. So our exposure to office buildings was 40% of our real estate portfolio. It's now just under 20%. It's been been cut in half over that period. And the longer term target is to bring it down to around 13%. And I know that a lot of office buildings have lost significant value, but I want to just point out that in core cities, major cities in the core downtown area, when you have a high quality building, those buildings are holding up. They're fully leased or close to it and doing very, very well. However, we have made the decision and we have been reducing our exposure there. Now that money is being obviously freed up, and we have been investing in three areas. One is multifamily housing. It is a great asset for our pension, our long-term liabilities. So we like it very, very much. The other areas, and I know it's not a part of the question, but the other areas that we've been putting our real estate capital have been into logistics, so warehouses, but also data warehouses. So when you think about all the information, if you drive a Tesla, there is so much information today when you're driving down the road and it's got its cameras recording everything. There's incredible amount of storage that's required. So we've taken up with some of the larger web-based providers of storage, and we're building data warehouses for them. So again, we reduced our office building holdings. We've already done that. We've got a bit more to go, and we've been putting it into multifamily. We've been putting that into logistics and warehouses, regular warehouses, and also data warehouses.
Great. Thank you, Gordon. Next question I have is going to be for Donna. Is there any consideration for additional voluntary contributions akin to what OMERS offer?
Thanks, Gary. At this time, we're not planning additional voluntary contributions as a planned feature.
Okay. Thank you, Donna. Judy, the next question's for you. I work for the federal government as well, and I've bought back my pension at $50 per month. Why can't I do this with the municipal pension and they only give me a 5-year buyback period? Why not 10 years?
So that's a great question. Good morning, everybody. So just for background, members can buy service for an approved leave under some circumstances, namely that they were an active member when they took the leave and that they apply for that purchase within 5 years of taking the leave or within 30 days of ending their employment with the employer with whom the leave was taken. And that's subject to some limits that I won't get into now. Members can also, though, make continuous contributions while they are on an employment standards related leave, such as parental leaves, that kind of thing. But having a window to purchase a leave after the leave aims to balance really two competing interests. One is getting money into the plan in a reasonable time, but also members having time to save money for a purchase. So the 5-year limit itself was set following advice from the plan actuary when the board adopted the current salary and current contribution rate approach. And that was back in the really at the turn of the century. And because of the price of past service increases as time passes, the plan really needs to get the purchase cost in as close to when the leave happens in order to keep the price of the purchase reasonable for members.
Thank you, Judy. The next question I'm going to address it to Gordon. How do you measure the carbon footprint of the company you invest in? And how do you ensure that the method of measurement is consistent and accurate?
We do align with PCAF and following, Zoom quit unexpectedly. Gary, did I just log out? Gary, am I still here?
Yes, you are.
Oh, good, because it told me I had been logged out, so I'm still alive. Thank you.
Okay.
So
Would
as
you
I
like
was saying,
me to-
we do align with PCAF and are following best practices.
Oh, now we lost you. So we'll come back to that question in a bit. So moving on, the next question I have is for Aaron. What does temporary annuity mean?
Good morning, Gary, and good morning, everyone. Thank you for the question. Temporary annuity enables members to convert a portion of their lifetime pension into additional funds for their early retirement years. There are 3 temporary annuity options. You can take a full temporary annuity, half, or a quarter. You can use the personalized pension estimator in My Account to see how a temporary annuity would affect your basic lifetime pension. And this will help you determine what your pension amount will be before and after age 65. For example, if you retire before age 65, you might choose to top up your monthly pension. This means your lifetime pension would be reduced. So after 65, your pension would drop by a certain amount. The younger you are when you retire, the bigger the impact a temporary annuity would have on your pension after age 65.
Great. Thanks, Aaron. I'm just going to the next question first. The next question is for Donna. Lots of people are working during the AGM and they can't attend. Have you considered having the AGM in the evening or on the weekend?
Thanks, Gary. Lots of great questions this morning. I appreciate this question and the desire for as many people as possible to attend. We take that into consideration when we're planning these events in terms of date and timing. One of the good things about a virtual meeting like this is people can watch the meeting on demand, and it'll be posted on our website. They can watch the whole event or focus on parts that are most interested to them. Again, thank you for the question and the input.
Thanks, Donna. I got another question for Aaron. Ransomware attacks seems to be happening more frequently. How do you protect members' privacy and that there's no disruption to their benefits?
Yeah, thanks, Gary. The BC Pension Corporation takes protection of members' personal and financial data very, very seriously, and we invest a lot of time and energy in ensuring that we protect our members or the members' privacy and the information that we hold. We regularly review our cybersecurity model in response to new and ever-changing threats. We also spend considerable time training our staff to ensure that we have complete training on privacy and security. Employees are required to refresh their knowledge every year. Protecting members' personal and financial data is sort of a foundational activity for the corporation because of the importance that we play in ensuring that we protect that information for members.
Great. Thanks, Aaron. I see Gordon is back, so I'll go back to the question. I'll just repeat the question so to remind everybody. So, Gordon, how do you measure the carbon footprint of the companies you invest in, and how do you ensure that the method of measurement is consistent and accurate?
I just want to point out that while Donna was saying, was hearing from someone how great to have this done virtually, I was losing the signal. So there are benefits, but there are a few disruptions as well. So we do align, as I said, to PCAF, which best practices. And you can actually, if you want more information, go into our annual report and you'll see our task force for climate-related disclosure report in there, which I think would be a lot more elaborative than I can provide here. But what I will share with you, which isn't in the annual report, is what we're doing looking forward. And the first is that, the data is still improving that we're getting. And so our analysis and estimates are still improving. But we do plan to have to bring in auditors and have this carbon estimates audited in the future as we get better at that. And we also have a project in place that's ongoing this fiscal year. So that's going to the end of March, where we are looking to significantly improve, but also to make almost live the data of the carbon footprint of the overall portfolio. And that is a very big project. I'm not promising that it'll be finished by the end of the fiscal year, but it's going to give us a lot more information because we're going to be pulling in data from all of the assets, including our private assets. And it'll be a lot more, I won't say live, but more current information, Gary.
Great, thank you. The next question I have will be for Donna. What does guaranteed stand for? What are the key features and benefits that make the municipal pension plan a compelling choice for municipal employees? And how does it differ from other retirement savings options available in public sector?
Wow. I think being a defined benefit plan, it actually is a benefit in itself because the plan members can be confident that their pensions will be there when they need it. The municipal pension plan is based on a formula that uses your years of service and your highest average salary. The plan is well positioned to withstand market fluctuations, and your pension is secure and there for you when you retire. So it's guaranteed based on the formula at the defined benefit plan. The plan is good value and it's dependable income in retirement. Is there anything else you want to add to that, Gary?
Well, I think those are just some of the key features of a defined benefit plan. Other defined benefit plans in the public sector have similar features, and some are have different features, but reliable, being able to predict what you get in the future are all similar. So thank you very much. The next question I have is for Judy. Is it possible to invest your retirement funds on your own before retirement and still have your employer match your monthly paycheck contribution?
So the short answer is no, not if you're contributing to the municipal pension plan. So under our rules, municipal pension plan contributions come to the plan where they're invested in pooled funds with BCI. Nothing prevents you from saving additional money if you want to for retirement through a TFSA or an RSP or another vehicle. But there's no obligation for your employer to share in those costs unless you have a separate arrangement with your employer to that effect. But the plan rules themselves don't permit you to invest the funds on your own.
Great, thank you. The next question I have is going to be for Harpinder. The Canadian oil and gas industry pays good dividends and provides good cash flow and relatively cheap assets. Lots of these companies have good ESG records. How can I ensure that as a municipal plan, a municipal plan will not be cutting off this large and vital industry in our Canadian economy?
Thanks, Gary. Yeah, so essentially we govern the plan in the best interest of the plan beneficiaries and have a fiduciary duty to invest the fund in the best financial interests of the members and their beneficiaries. Now, although we do recognize that climate change presents both risks and opportunities for the plan's investment portfolio, we believe that companies that take environmental, social, and governance factors into account overall have a less risk and generate more long-term value for investors like the pension plan compared to companies with less robust practices. Our goal is on the expectation that the rest of the world will continue to evolve and governments will deliver on their global commitments on climate change. And we'll review our goal annually to ensure that it remains prudent and aligned with the board's fiduciary duty. Thank you.
Gordon, would you have any additional information on this question?
For sure, Gary. In our active portfolios, we're obviously looking at returns and risk. And if there are companies, as the person posing the question mentioned, that fulfill our return and risk objectives, and we would be investing in it. But I will say, we are very active engaging with both the management and the board, the chair of the compensation committee, for example, of those companies to make sure that they have a plan in place for the ongoing energy transition, to make sure that because we're a very, very long-term investor. And so if they don't have those plans in place, then that will depreciate the value of our asset long-term. But today, 80% of energy use still comes from fossil fuels. But as that reduces over time, we want to make sure that they've got plans in place and they're preparing for that. And I think part of the question may be relating to divestment. And so if you don't mind, Gary, I would just touch on that as well, because I do get a lot of inbounds from interested parties asking us to, divest from this, sell that, get rid of everything. But, if we sell something, somebody else is buying it. And it's usually someone who does not have the same sense of fiduciary responsibility that we do. As I said, I have a team at BCI of 16 people in my ESG, my sustainability team that are actively involved in engaging with the companies, voting the proxies, working on plans with them, collaborating with other funds around the world, working on putting pressure on companies that don't have plans and aren't making these pressures. So if we sell to somebody that doesn't have that, well, maybe we feel better. We look in the mirror and say, well, guess what? We don't have any carbon in our portfolio, but we haven't actually helped the world. We haven't actually used the muscle and the influence that we have to make these companies better. So as I said, there's a lot of pressure to divest, but I don't think it makes the world a better place. It doesn't raise the cost of capital. There's been studies shown that selling does not raise the cost of capital for these companies. It doesn't make it more difficult. All it does is allows us to wash our hands and not be able to invoke any change. So I wanted to add that as well, Gary. Thanks.
Thanks, Gordon. Just a note here. Someone has asked for the link to my account. We'll have a slide at the end of our presentation today with resources, including that link. So we'll have that up on a slide at the end of our Q&A session. The next question, I'm going to be referring to Aaron Walker Duncan. It's the question is, continuous contribution leaves are very onerous on employers to process and for the plan as well, as I understand it. Is the board looking into alternate solutions?
Yeah, so thanks very much for this question. I assume it's come from an employer. I guess I'll start by saying we at the Pension Corporation, we sympathize with you as well, because we feel the administrative burden of these leaves as well. Maybe I'll back up and just remind everyone, a continuous contribution leave was introduced a couple of years ago by the plan as a way to expand the options available for members taking certain leave types while they're actively employed. So typically leaves covered under the Employment Standards Act. So this might be maternity leave or parental leaves. And unlike the current rules where members, once they return from a leave, they have up to 5 years to purchase that time, we introduced the option for members to continue to make contributions while they're on the leave of absence. So effectively purchase the leave while they're on their leave of absence in those circumstances. So it was about expanding the options available for members, which is great. But we also recognize that there were some not unintended, but recognized administrative issues associated with that. So we at the Pension Corporation are exploring how we can better manage that process, perhaps through more automation. And so nothing right now, but work is underway to try and improve that for employers and ourselves, because ultimately that'll make the process smoother for the member as well. So more to come, but we are looking at it.
Great. Thank you, Aaron. The next question I have is for Gordon. How is the divestment of investments going with Russia, as noted was happening last year? Also, are you starting to invest in alternate energy, specifically geothermal?
Okay. Well, let me add first on Russia. We can't sell anything in Russia. We're forbidden from trading in Russia, and anyway, there's no market. But what we did do is to mark everything that the exposure that we had, $200 million, which I know it sounds large, but on 250 billion. So it was not in a relative terms a huge exposure for the organization. But we did write everything down to zero. What was that, a week and a half after the invasion, or maybe it wasn't even that long, less than a week after the invasion, we wrote everything down to zero. So we've made no further investments, and it's all sitting down in the vault marked at zero. So if ever something happens, and there's value to it, it's still there, but there's no way for us to get rid of it anyway. And so it's sitting at zero. As for alternative investments, we've got, as a BCI overall, has just over $11 billion invested in climate-related investments, and those are investments defined by the Sustainable Development Goals. Of that 11 billion, 4 billion belongs to the municipal pension plan. Some examples are, for example, we bought in our infrastructure portfolio solar company, Redden Solar, in the last year. We've also made a good investment in Europe in a battery storage business. And we have been looking, there's a huge amount of capital is going to be required for the energy transition. So a lot of organizations today, manufacturing, for example, are using fossil fuels to power their operations. They want to change, but it's incredibly expensive. So how are they going to do that? How are they going to finance that? So there's a lot of capital that's going to be needed going forward to finance this energy transition. A lot, and it's going to take decades. And so we're looking at various partners for us to get involved in putting some money into some of these energy transition funds.
Great. Thanks, Gordon. The next question I have is going to be for Judy Payne. When I hear or read that COLA in the municipal pension plan is based on CPI numbers from September to September, can you explain what this means? Is it based on September 1st of previous year to August 31st of the next year?
Great question. And all the plans calculate the change in the consumer price index slightly differently. The way municipal does it is we look at the difference between September 30th of one year and September 30th of the prior year. So in this case, in this year, that number should be available mid-October, so shortly after the AGM. And then the board will make a decision with respect to 2024 COLA in November.
Great, thank you. The next question is related to the MRBT, so I will either address it to Bonnie or Monique. So the question is, what is the difference between reimbursement percentage and dollar maximum regarding massage therapy? Perhaps
I'll let Monique clarify more thoroughly, but what the benefit is reimbursed at 70% to a yearly maximum of $500. So I'll let Monique add to that, but that's basically what those two terms cover.
Perfect. Thank you very much, Bonnie. Yes, so paramedical practitioners on your Pacific Blue Cross benefit plan with the MRBT are covered up to $500 per practitioner per person per calendar year. So we're looking at physiotherapy, massage practitioners, acupuncturists, chiropractors, etc. And there's that's one aspect of the plan design. So the paramedical maximum, a yearly maximum amount. But the other aspect is the co-insurance, and that is 70%, as Bonnie correctly stated, 70% of the first $1,000 paid per person per calendar year. And it actually goes to 100% thereafter. So after $1,000 has been paid by Pacific Blue Cross, then it moves to 100%, which is great. So there's those two aspects to consider when you're submitting for a paramedical practitioner. Now, just as a brief example, because it might be easier to understand, if you went to a practitioner and the coverage was, let's say your expense was $100, and you had already paid your deductible, 70% of that would be covered, so $70, assuming all things remain equal. Additionally, I'd like to comment on the fact that this information would be available to you on the special microsite that we have available for the MRBT. It's a customized site for you. You can visit it at, and perhaps we can add it to the chat, please, www.pac.bluecross.ca/MRBT. And there you can find all kinds of information with regard to your booklet. You can get a quick brochure to see high-level plan design information, as well as a lot of other information about your plan. So I encourage you to take a look at the microsite, as well as your Pacific Blue Cross member profile access, where you can access your individual information about your claims. You can submit claims, everything on the Pacific Blue Cross main website. I hope that answers. Thank you.
Thanks, Bonnie. Thanks, Monique, for your answers there. The next question I have is for Aaron. What's the best plan if for a member if they have 13 years in the plan?
Thanks, Gary. Well, first of all, I'd say congratulations. That's a pretty good amount of service in the municipal pension plan. Without knowing any more information about the member's circumstances, like their age or their earnings level, things like that, I can't really comment on how good something is or not, other than to say I'd encourage you to go to the plan website. You can check out not only all the great educational information that's available online for members about the plan. There's lots of videos, there's webinars that you can sign up for, but also make use of the personalized pension estimator. So you can go in and take a look and see, well, what does 13 years mean for me? And based on the salary information that's been provided for you and that sort of thing. The estimator looks at projections. So if you're depending on your age and how close you are to retirement, there's different variables that you can put in there to determine what your expected pension might be when you come to retire. And so, yeah, I'd encourage you to look at that sort of information along with the education material that's available to you. But also just say, yeah, congratulations.
Thanks, Aaron. The next question I have is for Donna. The goal of maximizing the pension's investment return and conformance to target mandated by climate change consideration are not necessarily always aligned. What is your approach to this potential conflict of goals? How does the potential conflict inform your interpretation of your fiduciary responsibility?
Great question. Thanks for that. As a board, we govern the plan in the best interest of plan beneficiaries and have a fiduciary duty to invest the fund in the best financial interests of members and their beneficiaries. We believe climate change is the risk and climate action is the opportunity. That's why we are preparing the plan for a low carbon future and why we will invest in solutions while meeting our fiduciary duties. Our goal is based on the expectation that the rest of the world will continue to evolve and governments will deliver on their global commitments. We'll review our goal annually to ensure it remains prudent and aligned with the board's fiduciary duty. Thanks, Gary.
Thanks, Donna. The next question I have is for Aaron. If a member is ready to retire and is going to be choosing a joint life option, does the application form use the term spouse or partner as a beneficiary?
Thanks, Gary. I believe we use the term spouse because it's set out in the spousal declaration form, which is a statutory form that we're required to use under the Pension Benefit Standards Act. But the definition of spouse is broad and does include both common law and legally married individuals. So all that information is included on the material that's provided with the forms and as part of the online retirement process.
Okay, thank you, Aaron. The next question I have is going to be for Gordon. What effects on investment do you think that the civil unrest in the Ukraine and Israel will have on our Canadian investment/economy?
Well, it's definitely going to create some volatility, as we've seen. I think if I can just focus on the Ukraine for a moment, and listen, I'm not addressing all of the humanitarian suffering, which is quite devastating. Some of the stuff I've read is unbelievably in both of the fights. But from an economic and a market perspective, the U.S. dollar has been the reserve currency since at least the end of the Second World War. And the U.S. Treasuries have benefited from that. So interest rates at the longer end, all across the whole U.S. curve, interest rates have benefited in the U.S., kept lower than they might otherwise be because of the demand for U.S. dollars. But what happened with the invasion of the Ukraine, Russia, which had some reserves tied up in U.S. Treasuries, lost access to those. So what that meant is the world was put on alert. If the U.S. gets upset with you about something you're doing, you may not have access to those U.S. treasuries that you've put some of your extra cash into. And one of the largest owners and buyers of U.S. treasuries in the world has been China. And it didn't take them long to figure out that maybe that's not such a great thing for us to use the US dollar as the reserve currency, to have so much invested in US treasuries. And so if you look at the Chinese purchases of US treasuries, it's been falling. Now, there's many reasons why longer term interest rates have been going up. There's many different things, but certainly the lowering of demand from China, which had been a very large buyer of U.S. treasuries, has put upward pressure on interest rates. The other, coming from both of these skirmishes, has been the impact that it's had on commodity prices and the supply of commodities. Now, Russia's finding ways to get around that by selling into some other countries that are less scrupulous than perhaps we are, in obeying the sanctions and getting cheap oil. But generally, it's put upward pressure on commodity prices. But I do think, Gary, the biggest has been the pressure on U.S. dollar as a reserve currency and longer-term interest rates and the flow of funds going forward.
Great. Thank you, Gordon. The next question I have is for Bonnie. What is the money value of the MRBT?
That's a great question, and thank you for it. Since the change in plan design and the creation of the trust, we are now able to earn investment income. So as at December 31st of 2022, the trust's total assets were $157.2 million, and total liabilities were $20.1 million. And that means that the net assets available for benefits were $137.1 million. And you can learn more about that, about the Trust's financial summary and performance by reading the 2022 annual report, which is available now at mpp.pensionsbc.ca, about us, who we are, Municipal Retiree Benefit Trust. That's our first annual report, and we're very pleased to be able to present it to plan members. It's a group plan, so the benefit is in the group, but the assets are sustainable for the future going forward too. The board is really cautiously optimistic, as I said in my previous comments. So thank you.
Great. Thank you very much, Bonnie. We have one last question, and the question is, will the COLA cap be reintroduced? Following our last valuation, the COLA cap was cautiously removed from our cautiously removed for 2023 to 2025 on the advice of the plan actuary. We continue to closely monitor inflation, investment returns, and the health of the plan. The COLA cap will be revisited at the next valuation. This concludes our 2023 Annual General Meeting. Thank you to everyone who helped make this event possible, and to all of you joining us online today. Again, if we didn't get to your question, we'll make every effort to respond soon on the plan website. Additionally, a recording of today's event will be published to the plan's website under About Us. We'll welcome your feedback on the AGM. Your input helps us continue to improve this event. This can include what worked for you and what did not. Anything that you like to see different next year. Take a moment to share your thought by sending an email to mpbt@pensionsbc.ca. If you have a personal pension question, remember that you can sign in or register for my account and ask your question through Message Center. Finally, I will leave you with a list of resources shared throughout the AGM. These will appear on the screen now. Thank you again for being here and for engaging with your pension plan. Spread the word. Next year's AGM is on October the 17th, 2024. We look forward to seeing you online again next year. Thank you.